included in your debt utilization portion, only your credit cards, which also means you need a credit card. If you don't have a credit card at all, it affects 30% of your score. I don't know if your score could be 30% higher if you had a credit card, but you're definitely missing out on 30% of that. I mentioned before that say you were in school and you didn't do one assignment. You didn't do one assignment in school, and that assignment was worth 30% of your overall grade. If that's the case, then the best you can do by getting 100% on everything else, the best you could do is a 70% in that particular class. So you need a credit card to help you with your credit score. All right. So look, the length of history I was talking about, 15% of your credit score is based off of your length of history. So if you pay on time, 35%, and you add this length of history, that 15, then you've already affected negatively or positively 50% of your credit score. And then again, if you add in your credit card and debt utilization during that credit card, now you're at 80%. Now you know what you can manipulate, what you can use, what they use to create whatever your credit score is. So you know that information. All right, so let's take a pause right quick. It's middle of the show already, and we're going to go ahead and do a couple more shout outs, and then we're going to get to the question of the day as well. So I shouted out my son, Carter. So again, happy birthday, buddy. I shouted out Jalen as well. I want to shout out Christopher Walls. Christopher, or Chris, celebrated a birthday earlier this month as well. So happy birthday to you, Christopher. And then I want to give a happy birthday shout out to Kendall Hill as well. Kendall Hill is doing big things down there at Alabama A&M. I hope that's where he at, because if I mention the wrong school, he's going to kill me. But Kendall Hill, I want to say happy birthday to you. I got to give a big shout out to Kalana Mack as well, Miss AKA herself. Happy birthday. She celebrated a birthday earlier as well. So happy birthday to you, Kalana Mack, as well. All right, so let's jump into the question of the day. The question of the day is brought to you by Cute as a Cupcake, the cupcakery and bake shop, where the cupcakes are more than just cute, they're delicious. Cute as a Cupcake is located at 2008 West 81st in Maryville, Indiana. Get by Cute as a Cupcake and tell them that the 800 credit score man sent you. All right, so our question of the day comes from Corey, and Corey is out of Texas. Corey's question is this: what impact does a short sale have on your credit report? And that's a great question. A couple of weeks ago, maybe it was last week, I talked a little bit about mortgages and that whole kind of process. Actually, it was a couple of weeks ago. I talked about that whole process. So what's a short sale? So a short sale refers to your home or your mortgage, basically, meaning you are selling your home for less than you actually owe on it. So for an example, if you have $200,000 home and you sell it for $150,000, there's a $50,000 gap in there. You're selling it short. So you're selling it less than what you actually owe on it. So the word short sale, Corey, does not actually appear on your credit report. There's no designation for short sale on your credit report. So typically it'll say settled, or it'll say settled for less than originally agreed. Because what did you do? You agreed to pay, $200,000 for this particular home, but now you're not doing that, because when you sell the home, that revenue check is only going to be $150,000. So you did not pay it originally as agreed. And typically, the bank that holds your mortgage will only allow a short sale if you're behind on your mortgage. Now, that isn't an absolute, because if you talk to your lender prior to falling behind, they may agree to a short sale for you. So that happened a lot, and I mean a lot, during the housing crisis. So if you're behind, of course, if you're behind, then it negatively affects your credit score. So absolutely, it's going to negatively affect your score on a monthly basis if you're behind. And unfortunately, when banks do say, well, no, we won't allow a short sale, because you have to get their permission. You've got to get their permission to sell it short. You can't just go and sell it short and then send them a check, and then you're no longer obligated to it. You have to get their permission first to do so. So if you're behind, on a negative base on a monthly basis, it's going to negatively affect your credit score. So then they're putting you in a hole already as it is. You're behind and you owe this money, and then it's also impacting your credit score. Could be as much as 60 points every time that you're behind. Now, if you have a 700 and the credit scoring system goes from 300 to 850 and you're behind 1 month, you drop 60 points. You're behind another month, you may not drop 60 points the next month. You still may drop, but it may not be the full 60 points on that. So just beware of that. So is it bad for your score? Is having a short sale as bad for your credit score as a foreclosure? It's not as bad. So if you have the opportunity to be in a short sale versus going into foreclosure, it's not as bad, but it's still bad nonetheless. So if you're ranking the negatives, if you're delinquent on your payment, then of course that's bad. If you go to a short sale, then that's badder, I guess, if you will. That's worse. But then a foreclosure is the worst of all of them. So if you fall into foreclosure, then it's absolutely the worst for you because you just didn't make that payment. The bank basically takes the house from you, and you don't have anything to do with it. So the recovery from a short sale in terms of your credit score is shorter as well for you than if you go into foreclosure. So if you have to choose the best of the worst, then short sale would be the better option for you if you have that issue. And again, those late payments can drop. If you're late, it can drop 60 points. On a short sale or a foreclosure, your credit score can drop anywhere from 100 to 200 points. Now, that's a lot of points. And if you've been working on your credit forever and it took you a long time to get there, it might have took you forever to actually get qualified for a mortgage, and then now you've improved your credit score all that time. If you go in the short sale or if you have a foreclosure, it's absolutely going to negatively impact your credit score in a great, great way by 100, maybe even 200 points. However, don't be obsessed with your credit scores like I am. So don't hurt yourself financially trying to get or keep a credit score. Credit scores fluctuate, and you can get those points back with some strategic moves. So keep listening to the 800 Credit Score Man show, and you'll be just fine. Sometimes you might have to take 2 steps back just so you can go forward. And if that's the case, then that's the better thing to do. You might have to give your car back at one point in time, or you might have to get so you can get one with a better payment that's better for you, or you might have to do a short sale on your home, or you might even have to file bankruptcy. But at the end of the day, you can always recover from your credit score. Now, Rome was not built in a day, and neither was your credit score. So it may take you some time to get back, but you can absolutely get back, especially if you're listening to the 800 Credit Score Man show. I'm going to give you all the tips and tools that I have in my arsenal to help you get back on your feet. All right. So look, if Corey, thank you so very much for asking the question. He sent me that question in an email. So that's 800 creditscoreman@gmail.com. If you have questions, send me your questions and I will absolutely answer you directly. You can also catch me on Facebook, 800 Credit Score Man. You can also catch me on Instagram, 800 Credit Score Man. Also on Tumblr as 800 Credit Score Man. And you can follow me on Twitter at Credit Score _man on Twitter. Follow me there. I always follow you back. So if you want a follower, I will absolutely follow you back if you follow me on Twitter. That's Credit Score _man on Twitter. Please hit me up there. So Corey, thank you so very much. You are officially a part of the 800 Credit Score Man show family. Thank you. And again, this particular segment is only as good as you guys. So send me your questions and I may answer them on the air. Cute as a cupcake, Cupcake and Bake Shop, where the cupcakes are more than just cute, they're delicious. 2008 West 81st in Maryville, Indiana, sponsors this particular segment of the show. So thank you guys. All right, so let me give a couple more shout outs before I get to this last portion of what I want to tell you guys today. So I already shouted out Kalana Mack. That was the last one. Miss AKA herself. So happy birthday to you. I want to give a shout out to Zoe Castillo. She is a listener to the show. So happy birthday to you. I want to give a shout out to one of my former co-workers. That's Mike Grove down in Tennessee. So happy birthday to you, Mike. I also want to give a shout out to Lara Thompson as well. So happy birthday. And I cannot go through this show without giving Tiffany Andrews, I call her Miss Lou Wallace, my high school, Miss Lou Wallace. So Tiffany Andrews, happy birthday to you as well. All right, so let me give you guys these 5 actions that you can do today. You can do these actions today to help you with your credit. Now, one of the first things, and you guys absolutely should know pretty much all of this because we have run through these things time and time again. Now, of course, one of the first things you can do is to make sure that there are no errors on your credit report. You should know absolutely where to get your credit report because I've told you time and time again, annualcreditreport.com, annualcreditreport.com. You can get your information there and make sure you look for errors. Last week, I told you about everything that's on your credit report and what you should look for. Make sure all that information is correct. I do want to mention this, and I mentioned it earlier. The accounts that are listed as closed by grantor, but you are the one that actually closed it, make sure that you have that corrected as well. I didn't mention this. If you have debts on your credit report and they are more than 7 years old and been closed and they are not reporting off your credit report, especially if it's something negative, then you want to make sure that you contact them and you get that taken off of your credit report and look for duplicate accounts as well. So even if you have it's the same account, even if it's reporting good, you don't want duplicate accounts on your credit report. So if it says whoever holds your car payment and it's on there twice, then you don't want that on your credit report. It may not negatively affect your credit score, but if you go to apply for something else and they're dealing with your debt to income ratio, which is definitely different than your debt utilization, then that could hurt you. So you want to make sure that's off of there. And more importantly, oftentimes collections are on there and they're duplicates. So you may have a collection from AT&T and it says it's $100, and then you have another collection from AT&T and it says it's $130, and it's probably the same one. Make sure that you get those things off. Also, you want to do this. You want to help yourself out. So you want to automate your bills. So make sure you're not late on any bills at all. You want to make sure that you can do that. So automate your bill payments. Some of the bills that I have, I actually automate. So my student loan automatically comes out. This isn't on my credit report, but my life insurance, that automatically comes out. So you want to make sure that you do those things. Utilize your calendars in your phones or on your laptop or your desktop. Utilize your calendars on there so when you get an alert when those payments are due, so you can never be late. And maybe you want to pay online as well. If you can pay bills online, it's a lot quicker. If you happen to be late getting to them and the bill is due tomorrow, it's definitely not going to make it there if you put it in the mail. So you might want to pay those things online as well. A third option or action that you can take is, like I discussed earlier in the show, was to make sure that your about your available balances. You want to make sure you watch them and you try to stay at 30%. I gave the example of $300 versus $500 as a limit that gives you 60%. But say you have something bigger. I mean, all you got to do is do the calculation. If you got a $10,000 account, you can't spend or hold a balance over $3,000. And that's the mindset that you need to have. So if you have that particular credit card and it has whatever balance, if it's just $1,000 and you have that account, then in your head you need to say to yourself, I can't spend over $300 on this particular credit card. Make sure that you do that. And then make a doable plan. If you have some credit card debt and you want to get out of that debt and you're at 80% of your debt utilization and you want to get down to that 30% threshold, make yourself a doable plan. I did a show talking all about debt and how you can get out of that credit card debt. I gave you a couple strategies. One was called a snowball. One was called an avalanche. Go back and listen to that particular show. I'm not sure what the name of it is. It probably starts with debt reduction. Look up that show, go and listen to that, and it'll give you the strategy of how to get out of credit card debt as well. And last but definitely not least, use your credit to build good credit. So, like I mentioned, you may need a credit card. If you're missing out on that 30